agency. Credit rating agency, it is the organization who who make assessment of a instrument, whether that instrument is capable enough to pay return to the investors. So that kind of factors are being checked by credit rating agencies. And as we discussed that a credit rating, it is a measurement of a person or business, either person or a business entity's ability to repay a financial obligation based on income and past repayment history. So basically, credit rating agency, they do check about your financial obligation and which is based on income and past repayment history. How you have repaid the earlier amount to the financial institution. That particular history is being checked by credit rating companies. And on the basis of this information, they pass on rating to business or that particular instrument. And as I told you, there are some symbolic impressions are there, like say triple A, triple B, triple C, and triple D. Whereas triple A, which is highest safety, triple B, which is moderate, triple C, which is average, and triple D, which indicates default. So this way, the signals are given by credit rating agencies. And there are a few agencies who are top in India, like say CRISIL, ICRA, CARE, BWR. These are some companies who conducts credit rating. Now, let's know more about credit rating agencies. Let me show you some extra information about this. Now, after understanding the symbolic impression which is given by these companies, rating agencies, now let's know about what is the risk involved in foreign exchange. And before that, we will discuss about this small point, that is transaction matrix analysis, what it is. Transaction matrix analysis. Now, basically, this matrix, which is arithmetical model, financial accounting matrix or transaction matrix, is a novel way to describe financial stock dynamics. Means financial stock, like say capital market, basically how it has movement. Maybe market goes up, market goes down. So that is known as stock dynamics, how it works. So that kind of metrics are being developed. Now in this matrix, factors related to the economics, finance, accounts, and social, even politics are associated with this matrix. So it is a novel way to describe financial stock dynamics. Even a small thing between the entrepreneur, that also have effect on stock market, stock dynamics. Now, example is, suppose even if there is a quarrel between two brothers, and if both the brothers belongs to the same business, say let's take example of say Reliance Group. So Anil Ambani and Mukesh Ambani, even if there is a small dispute between these two brothers, immediately it has effect on their stock dynamics, on their share prices. Actually, it is nothing to do with their business, but since there is a dispute between two brothers, that also has effect on financial stock dynamics. So that is why a novel way to describe financial stock dynamics, whether it is related to the family issue or political issue, family issue, political issue, economic issue, business issue. These all issues are related with this stock dynamics. And with this model is being constructed, and this way the data is being analyzed. That cleanly integrates with the social accounting matrix formalism for describing financial flows. So this is all about matrix analysis. Now, as I told you, now let us know about currency risk, what it is. Now in currency, there are two type of risk for currency risk and a cross currency. Now currency risk is what? It arises from the change in price of one currency in relation to another. Means nowadays dollar rate is continuously increasing. So when we are having transaction in terms of Indian rupee, so Indian rupee is having risk. Indian rupee is having risk. If you are having transaction with dollar, because dollar is continuously increasing day by day. So who is exposed at risk? Not dollar. We are at risk because our money is getting devaluated. Our currency's value is going, and continuously it is going down. So we are at risk, not dollar. Are you getting my example? Nowadays, who is at risk? Dollar or rupaya? Who is at risk? Can you answer me? Considering today's situation, which currency is at risk? Which currency is having currency risk? Indian rupee or a dollar?
India rupee.
Indian rupee. So because Indian rupees valuation is going down, so that we are at risk and not dollar. And what is cross currency? It refers to a currency pair or transaction that does not involve the US dollar. ज्या currency pair मध्ये US dollar चे involvement नाही आहे. That pair, say for example, Indian rupee and yen. Yen is the currency of Japan. So Indian rupee and yen, that is cross currency. Or Indian rupee and sterling, Indian rupee and pound. So these are the example of cross currency where dollar is not involved. So does not use US dollar as a contract settlement currency. So in this contract, dollar is not being considered. तर त्याला म्हणतो आपण क्रॉस करन्सी where there is no involvement of dollar is known as cross currency. Have you understood this? Currency risk and cross currency. Where is the risk involved? Understood this point? Yes, please.
Yes, sir.
Okay. Going to the next slide. This is key mediating variable. It is known as KMV model. KMV model. What it is? Let us understand. KMV model. The long form is key mediating variable. Now what it is? The author name is Moody. So that is why it is Moody's KMV model. Author name is Moody. MOODY, as you see on the screen. Can you see my PPT?
Yes, sir. Same.
So it is a Moody's development. KMV is the world's leading provider. So it is one of the famous model. What it provides? Quantitative credit analysis tool. And to whom it provides? To lender. Lender. Lender means who are the lender? Who lend money from the bank. जे बँकेकडनं कर्ज घेत आहेत अशा लोकांसाठी they are called as a lender. Then investor who are having surplus amount and they are investing in bank. So they also use this KMV model. So lenders, investors, and corporations, companies, all corporate companies. So you will understand this particular model. It is useful to each and everyone, basically lender, investor, and corporation. So we help clients enhance the economic return in their business. Whatever investment they are making in a company or whatever amount they are getting from bank in the form of loan, how it is beneficial to business, how it is beneficial at a personal level. So that is known as economic return. How it is useful, how it is beneficial. That thing is being counted in this KMV model. So that is why it is a popular one. So we create product and services based upon sophisticated application of modern financial theory and statistical analysis. So this particular model, which is based upon sophisticated application. So it is not considering traditional things, but the modern things, sophisticated, practical. Sophisticated means practical application of modern financial. Even statistical tools are also being, and that is why, which helps not only business, but it helps to the lenders as well as investors, and it is based upon sophisticated application of modern financial theory and statistical analysis. So this is all about KMV model. Now let us understand what are the assumptions considered in this model, because every model, every theory model which is based on some assumption. So there are some assumptions. काही गृहीतके असतात त्याच्यामध्ये. So let us understand what are the assumptions in this model. So assumptions. The KMU model uses the real-time data. So whatever happening today, as I know, told you that this is based on sophisticated application and modern financial data and statistical analysis. So that is why it uses real-time data. It can update the probability of default in real time based on the data of securities market. And second assumption, the first assumption, remember the first assumption, let me highlight what is the first assumption. First assumption is real time data, real time data. This is the first assumption. Then second assumption, the assumption of KV model. Real time data one, and the second one is the data related to the security market. Security market. So when we talk about security market, so always they study capital market and the information which authenticated information which is given by SEBI, because SEBI, which is the apex body in capital market, like in banking, RBI is apex body. Similarly, capital market apex body is SEBI, Security Exchange Board of India. So whatever information given by SEBI, that information is being considered by this KME model. So first assumption is real-time data, and the second one is data of security market. The efficient market assumption is not required. Now, this KME model, basically it is calculated from the total value of the firm asset. V, that is V stand for total value of the firm's asset. Value, V stand for value of firm's asset. And the volatility of the asset value. This is the sign of volatility of asset value. This particular sign. These are the statistical sign, volatility, asset value, from the iteration between equation of E and this. So we will not go into this statistical information. Here you can mention that KME model applies statistical tool, and where they assess the total value of firm and volatility of asset value. So these 2 points you mentioned over here: total value of firm and volatility value of asset value. This information being assessed by KME model, and this way KMV is being used in practice. Now, as we learn that KMA model, it is key mediating variable, and where in key mediating variable, KMA stand for key mediating variable, and where investor, lender, and corporations are using the economic return in their businesses. And this particular model, which is based upon sophisticated application of modern financial theory and statistical analysis. And we also learn about the assumption. As I told you, it is based on real-time data, number one, and number two is data of security market, real-time data and data of security market. So these are the two assumptions considered in KMU model. Now, this is aim carry trade syndrome. What is this aim carry trade syndrome? First, you read this slide, and then we'll explain it. Everyone, please read this slide. Can you view this slide? Is it visible? Hello? Can you see this slide?
Yes, sir.
So just read this slide and then we'll explain it. Once you are done with reading, inform me so that I can start with the explanation. Whose currency is yen? Whose currency is yen? Yes, please. Whose currency is this yen? Which country?
Japan.
Japan. Now here, in this example, we have compared Japan yen currency with American currency, that is dollar, USA currency, dollar. And the third person who is from a different country. He is not from either Japan or from maybe uh, America. The person is from other than these two countries. Now, if he is making investment, now how it works? What is the syndrome here? Now, basically, there is an uncertainty of exchange rate. And as we know, no one has control over the exchange rate because there are several factors which works upon on the exchange rate, but the risk is involved. So here in first paragraph, it occurs if either the value of n increases. Suppose if n value, if it is continuously increasing, or the value of dollar So other currency, definitely it will decline. If yen is increasing, it means dollar is declining, or if dollar is increasing, it means yen is declining. It is opposite to that. Now here traders have to obtain more dollar to pay back when the yen you have borrowed. Now if you have borrowed yen, if you have borrowed yen, and if yen is increasing, if yen is increasing and dollar is declining, it means you are losing your dollar. You are losing your dollar. Now here, if difference is enough, if there is a enough difference, then but that particular company or person may be bankrupt. So to avoid this bankruptcy, traders also get into trouble if the currency values changes a lot during the year, in a particular year or in a particular time. If there is a huge change, so it will have impact on the person who is making transaction into this yen carry trade syndrome. So the biggest risk in carried trade is the uncertainty. This is the basic cause, uncertainty of exchange rate. There is no surety, and because of this uncertainty, the risk is involved in a great manner. Now, somebody might be thinking, sir, when we are aware that when there is uncertainty, then why should we make investment in this particular business? So such state of mind we cannot apply here, because as you know, more risk, more return. So this is the very basic statement in investment. Lower risk, return will be what? If there is a very low risk, return is what? Will you get higher return? Hello? Please do remember always in risk management, high risk, high return, low risk, low return. So with this principle, if you are exposing with high risk, naturally, if you are able to manage that risk, definitely you will be awarded with high return. Vice versa, if you are not having daring, if you are going with the low risk, then there will be low return. So always remember this formula: high risk, high return; low risk, low return. Are you getting me? Hello.
Yes, sir.
So considering this principle, if a business or a individual, if they don't want to go with the high risk, then there are other instruments available where risk is low, and when there is a risk low, returns are also low. So choice is yours. What is to be done? So this was all about unit number 5. So I declare that we have completed all the units from unit 1 to unit 5. Let's have little bit revision, but before we start revision, in case if you are having any doubt in respect of unit number 5, you are free to ask. Otherwise, we will just go through the slides what we have learned. We start from unit number 3. We will start with unit number 3. But before I go to unit number 3, in case if you have any doubt for unit 5, you are welcome. Yes, any doubt so far for unit 5? Now let me tell you what are the expected question on unit number 5. Expected question, it is about credit rating agencies. You will be asked that write a note on credit rating agencies. So there you have to mention what is the function of credit rating agency, which are the companies in India, and how do they rate the instrument, what are the symbol they use. That information is expected. So prepare that question. Credit rating agencies. Now let me take you to unit number 3. This risk management, basically it is in respect of bank. Can you see PPT? Is it visible PPT?
Yes, sir.
Now unit number 3, risk management. It is in respect of banking sector. Banking sector. Now what is risk management in banking? Basically risk management in banking, it is about the asset and liabilities of a bank. Now what are the assets of bank? Assets of bank are like whatever loan given by bank to the business and individual, that these are the asset of bank. Apart from land, building, furniture, machinery, loan given to the outsider people, that is also asset of bank. And what is liability of a bank? Whatever deposits have taken by bank of business and individual, that is the liability of bank, because in a future date bank will have to return that deposit amount with interest. Am I correct? Suppose if you are keeping deposit in a bank, say you have opened a bank account in the bank and there you have kept 50,000 rupees in a fixed deposit. So anytime you can withdraw 50,000 rupees. Is it not? If you are keeping 50,000 rupees in the form of fixed deposit, you can withdraw anytime now from bank. Yes or no?
Yes, sir.
So as a customer, you have that right. You can withdraw anytime. So that is why from the bank's point of view, it is a liability, because you can withdraw that amount anytime. So whenever you go for withdrawal, bank should pay your amount with interest, principal amount as well as interest. So that is why it is a liability for bank. Whatever deposits bank is accepting in their bank, that is the liability of a bank. Now here, there are 3 largest risks involved in banking sector. Which are these 3? Let me mark it here. Credit risk, then market risk, and operational risk. Now what is credit risk? Credit risk means bank also, whatever deposits banks are taking from customer, that deposit is being circulated in the form of loan. So whenever bank gives loan to other person or business, sometimes businesses and other person, they don't pay on time to the bank. So this is the credit risk which is exposed with a bank. Then market risk. Market risk, it is known as inflation and deflation. So this is the cycle. Inflation, after inflation, deflation comes. Then deflation follows inflation. So this is the cycle. But in this cycle, bank also suffers because of this economic cycle. Then another example of market risk. As we know that India being most of the people, their occupation is agriculture. About 65% people, their income is based on agriculture. So if monsoon is not good enough, So it also have impact on market. If there is no sufficient monsoon, then it has negative impact on the market. And because of this negative impact of market, it hampers on the banking sector too. And then operational risk. What is operational risk in bank? Nowadays, almost all banks are following core banking, that is online banking. So while handling core banking or online banking, there are risks from hackers. Sometimes passwords are being stolen by hackers, and then they do some scam in a bank, transferring from funds from a bank to some other account. So this is the example of operational risk. Operational risk. So while running bank, whatever technology they are using, because of that technology, risk is involved. Are you agree with this or not? Risk is also involved with the technology, or there is no risk in technology? Is there risk involved in technology, or it is risk free? All technology is risk free. What do you think? Hello? Hello? There is a risk or there is no risk in technology?
There is a risk.
So there is a risk. So this is the example of operational risk. So if you are asked now from the examination point of view, you may be asked, describe the largest risks which are faced by a bank. Describe the largest risks which are faced by a bank with appropriate example. So here you have to quote three risks: credit risk, market risk, and operational risk, and mention appropriate example, relevant example. Now, let's know more about credit risk, what it is. Now, let me take a credit risk. It is the possibility of loss resulting from a borrower's failure. Means bank have given loan to business and individual, but there is a possibility that business is not paying back to the bank. So that is credit risk. So traditionally, it refers to the risk that a lender may not receive principal and interest amount, which results in the interruption of cash flow. Now the very live example is Mallya. Mallya has taken loan from State Bank of India, and then he did not pay back to the State Bank of India. So this is the credit risk example of State Bank of India. Whatever loan they are given to the Mallya group, they could not recover that amount from Mallya. Now he is not in India. He has ran away, and banks are trying hard to recover money from his asset, whatever assets he is having in India. So these assets are being forfeited by bank, and they are trying to recover. But still, the amount is huge, so they are not able, because there are a lot of legal issues are involved. So this is the credit risk. Now, liquidity risk. What it is? Liquidity risk. Liquidity risk, it is defined as the risk of incurring losses resulting from the inability to meet payment obligation in timely manner. So liquidity means it is basically goes with cash. When you are having shortage of cash, that is the liquidity risk. Whenever the cash requirement is there, you should able to generate that cash. And if you are not able to generate cash, then it is said that this particular person or business do not have liquidity. Do not have liquidity. Now, just to make you understand, let me give the example. Say if you visit in a rural area basically there are farmers and laborers, mostly farmer and labor who stays in rural area. I'm talking about very remote area, rural, where there are no industries and no businesses. So actually, what is their main occupation? Hello? in a rural area, what is the main occupation? What is the main occupation? Can you answer me? I am trying to give the example of liquidity risk. What is liquidity risk? If you visit rural area, what is their main occupation? त्यांचा मुख्य व्यवसाय काय असतो ग्रामीण भागामध्ये? ग्रामीण भागातल्या लोकांचा मुख्य व्यवसाय काय आहे? फार्मिंग. आणि त्याचा साइड बिझनेस काय असतो अजून ग्रामीण भागातल्या लोकांचा साइड बिझनेस? Sorry, farming is their main occupation. What is their side business? Like say poultry or having a cow, buffalo, hens. ते काही लोक कोंबड्या पाळतात किंवा गाई म्हशी पाळतात असतं की नाही? ग्रामीण भागातल्या लोकांकडे एखादी गाय असते, एखादी बकरी असते. Hello, are you getting my example? If you observe rural people's occupation, main their occupation is farming, but along with the farming they also have some hens. काही कोंबड्या पाळतात ते किंवा बकऱ्या असतात त्यांच्याकडे किंवा एखादी गाय असते, एखादी म्हैस असते की नाही? हॅलो,
Yes.
असते ना? नाव अशा लोकांकडे जर तुम्ही गेलात, कुठल्याही ग्रामीण भागातल्या लोकांकडे जर तुम्ही गेलात आणि त्यांना जर सांगितलं की दादा तुमच्याकडे कॅश 1000 रुपये आहेत का, तर ही मे नॉट बी इन अ पोझिशन टू शो यू हार्ड करन्सी ऑफ 1000 रुपये. पण तो तुम्हाला सांगणार माझ्या घरामध्ये 2 पोती गहू आहेत, माझ्याकडे 1 पोतं तांदूळ आहे, माझ्याकडे 3 कोंबड्या आहेत, माझ्याकडे 1 गाय आहे, पण 1000 रुपये नाही आहेत, कॅश मध्ये नाही आहेत. त्यांच्याकडे हे सगळ्या प्रकारच्या वस्तू असतात. गाय असेल, म्हैस असेल, 2-3 कोंबड्या असतील, 2-3 पोती गहू असतील, पण हार्ड करन्सी त्यांच्या घरामध्ये नसते. 1000 रुपये एकदम ते काढू शकत नाही. एक 5-50 रुपये, 100 रुपये असेल, पण एकदम हार्ड करन्सी जर 1000 रुपये, 5000 रुपये, तर दे आर नॉट हॅव्हिंग दॅट मच कॅश अवेलेबिलिटी इन देअर होम. तर याला काय म्हणतो आपण की त्यांच्या घरामध्ये वस्तू आहेत पण लिक्विडिटी नाही आहे. ते वस्तू विकतील आणि मग पैसे त्याच्यातून मिळवतील आणि देन लिक्विडिटी विल बी इन्शुअर्ड. पण अशी हार्ड करन्सी त्यांच्याकडे नसते. So here we can say that most of the people who are staying in rural area, I am not saying all people, but most of the people, they are lack with liquidity. त्यांच्याकडे भरपूर प्रमाणात संपत्ती असते, नो डाऊट. शेती आहे त्यांच्याकडे, गाई म्हशी आहेत, पण तसं घरामध्ये 5-10 हजार रुपये कॅश मध्ये ठेवत नाहीत ते. त्याच्याकडे वस्तू असतात. त्या वस्तू विकून मग जेव्हा त्यांना गरज पडते त्यावेळेला ते कॅश अवेलेबल करतात. त्यांच्या घरात काही असेल, एखादं काही लग्न कार्य असेल किंवा एखादं काही काम करायचं असेल, घराचं बांधकाम करायचं असेल, तर ते एखादी वस्तू विकतात, त्यातनं पैसे आल्यानंतर मग ते त्यासाठी ते वापरतात. सो देर इज अ क्रंच ऑफ लिक्विडिटी. तेच जर का तुम्ही सिटी एरियामध्ये जर बघितलं, त्यांना जर आपण म्हटलं की तुमच्याकडे 5000 रुपये आहेत का, तर ते इमिजिएटली एटीएम कार्ड वापरलं, कॅश काढले की ते तुम्हाला अवेलेबल करून देऊ शकतात. सो देर इज, वी कॅन से देर इज अ लिक्विडिटी in a city area, but there is low rate of liquidity in rural area. रुरल एरियामध्ये लिक्विडिटी थोडी कमी प्रमाणात असते. त्यांच्याकडे संपत्ती आहे नो डाऊट, बट ऍज हार्ड करन्सी नाही आहे. हार्ड करन्सी दे डू नॉट मेंटेन. Then in bank, this is also one of the important area. NPA management. What is NPA? What is NPA? What do you mean by NPA? Can you hear me? What is NPA?
Yes, sir.
Non-performing asset. It is asset mean it is the loan which is given to the business, but that business is not paying back to the bank, such assets are known as non-performing asset. त्याला म्हणतो आपण नॉन परफॉर्मिंग. आणि त्याच्यात काही टाइप्स आहेत. व्हॉट आर द टाइप्स ऑफ नॉन परफॉर्मिंग असेट्स? स्टँडर्ड असेट्स. स्टँडर्ड असेट्स आपण कोणाला म्हणतो? असे लोन की जे गेल्या 90 दिवस किंवा 12 महिन्यापासून त्याचं रिपेमेंट झालेलं नाही, 3 महिने किंवा 12 महिने, त्याला म्हणतो आपण स्टँडर्ड असेट्स. स्टँडर्ड असेट एनपीए. सब स्टँडर्ड असेट म्हणजे काय? की असं लोन की जे गेल्या 1 वर्षापासून त्यांनी दिलंच नाही, हप्ताच भरला नाही गेल्या 1 वर्षापासून, तर त्याला म्हणतो आपण सब स्टँडर्ड असेट. तर याच्यामध्ये सब स्टँडर्ड असेट इज हॅव्हिंग मोर रिस्क, वेअर अ स्टँडर्ड असेट इज हॅव्हिंग लो रिस्क. कारण फक्त 2-3 महिन्यापासून त्यांनी हप्ता भरलेला नाही, तर त्यांच्या मागे जर तुम्ही लागला तर आपण पैसे वसूल करू शकतो. पण असं लोन की जे गेल्या 12 महिन्यापासून किंवा 2 वर्षापासून अजिबात काही दिलं नाही, तर असे लोक बेफिकर असतात, तर त्यांच्याकडनं पैसे वसूल करणं थोडंसं अवघड जातं. सो दॅट इज अ सब स्टँडर्ड असेट. आणि मग तिसरी कॅटेगरी आहे लॉस असेट्स, की आता त्या माणसाचा पण पत्ता नाही आणि त्याच्याकडे असेट पण नाही, आता बँकेचे पैसे गेले, दॅट इज लॉस असेट. की ज्याला तुम्ही लोन दिलेले त्याचा पण ठाव ठिकाणा नाही, तो पण पळून गेला आणि त्याने कुठल्या असेट पण बँकेकडे तारण ठेवणार नाही, हायपोथिकेशन नाही, तारण नाही आहे, त्याला म्हणतो आपण लॉस असेट. सो दीज आर द टाइप ऑफ एनपीए: स्टँडर्ड असेट्स, सब स्टँडर्ड असेट्स, डाउटफुल डेट्स अँड लॉस असेट्स. डाउटफुल डेट म्हणजे काय? की ऍटलीस्ट बँकेने थोडस इस्टिमेट केलेलं आहे की हा माणूस कदाचित आपल्याला देणार नाही लवकर पैसे, त्याला म्हणतो आपण डाउटफुल डेट्स. तर त्याला थोडस मागेला मग त्याच्याकडनं जेवढी रिकव्हरी करता येईल तेवढी रिकव्हरी करा, गोड गोड बोलून. सो दॅट इज डाउटफुल डेट्स. पण लॉस असेट्स विच इज द वर्स्ट असेट ऑफ अ बँक, कारण ते बँकेला बुडून पळून गेले ते लोक, त्यांचं काहीच ठाव ठिकाणा नाही. दॅट इज लॉस असेट. सो दिस इज ऑल अबाउट रिस्क मॅनेजमेंट असोसिएटेड विथ बँक. तर याच्यावर जर तुम्हाला क्वेश्चन आला तर लिहू शकता की नाही तुम्ही? इफ यू आर आस्क्ड क्वेश्चन लिहू शकता ना? हॅलो. What are the risks associated with? Question may be like this: discuss the risk associated with bank. So you have to mention about NPA, what is NPA, and then what are the types of NPA and their example. So this way you have to discuss the type of risk associated with bank. So this is all about unit number 3. Now, this risk management basically goes with financial statement. Financial statement are basically reports that depict financial and accounting information. Now here, what is the importance of financial statement? Because it provides a very important information in respect of company's income, expenses and profitability. हे सगळी information आपल्याला मिळते. So that is why financial statement is very useful. So these are the objectives of financial statement. And we know what is trading account, then profit and loss account. Trading account which disclose the information of either gross profit or gross loss, either gross profit or gross loss. That is the very purpose of trading account. Profit and loss account, which records all indirect information, indirect income and indirect expenses, and it discloses either net profit or net loss. And then last, balance sheet which tells us about the overall performance of company in respect of capital and liabilities as well as assets and properties. So that financial information is being disclosed by balance sheet. So we come to know the performance of company. So this is all about financial statement. This is about unit number 2. So have understood? Hello?
Yes, sir.
Okay, then we will stop here. I wish you all the best for your exam and CC's submission of assignment. In case of any doubt, you are welcome. You can meet me in the institute. I am available there before examination. In case if you are having any doubt in respect of either EPM subject, enterprises performance management or risk management, in case of any doubt, you can come and discuss with me. Okay. So thank you all for attending session and listening patiently and for your active participation also. Thank you very much.
Thank you, sir.